us. Um, and I'm really excited about today's conversation. As a little bit of background, Mountain Seed, as many on the call who are clients of ours know, we handle the appraisal process for around 300 or 400 community banks. And as we've been working with our clients on appraisal, ordering, the procurement side, and review, we are always looking for ways to serve our clients in a better way. And so one of those ways that we've heard over and over again is some sort of need for a residential evaluation product, which Mountain Seed hasn't offered. And so after going through the marketplace and looking for kind of best-in-class folks, we have been excited to announce earlier this year a partnership with ServiceLink to offer residential evaluations to our clients. And with that, I'm really excited to have Danny Wiley, the Chief Appraiser at ServiceLink, join us today on the call. Danny is, by all accounts, an expert, not only in appraisal, but in this particular evaluation service. Has a little bit of background. He's been an independent fee appraiser for 25 years, has the SRA designation for probably, I think that's 15 years. But he also served as a member of the Appraisal Standards Board of the Appraisal Foundation for 6 years, 3 years as chairman. So quite literally, I think when you think about who's written the book on some of this stuff, I think Danny is as close to the writer of that and an expert on all things that we're talking about today. So without further ado, I'm going to turn it over to Danny. Thanks for joining us.
Thank you, Carl. First, I want to thank you and Mountain Seed for inviting me to speak today. I really enjoy it. I am a little bit older than you're giving me credit for there. I'm actually, I started in the appraisal business in '82, and I've had that SRA for over 25 years actually now. But anyway.
Man, I need to check my math.
I just checked the calendar. I know. So I am the Chief Appraiser at ServiceLink. I've been the Chief Appraiser for 5 years. Before that, I had another position here for a year, and before that, I did spend 29 years out in the field doing what most appraisers do day to day. I live in Nashville, Tennessee. My family would tell you that I live at the airport, actually. I spend about a third of my time in Nashville, about a third of my time in Pittsburgh, where I actually am today, where our main office is, and then about a third of my time somewhere else. I have 6 flights this week, and that's not an unusual week for me. In fact, as soon as this wraps up, I'm heading to the airport to do a presentation in California tomorrow. So my personal experience with evaluations, and I had a slide on here, and I think Carl thought I was trying to promote myself, and so he cut it out. But if you went back to the old Wiley group, that was the firm that I owned in Nashville for 15 years, actually on our logos, our business cards, and everything, we listed that we did appraisals, consulting, and evaluations. That's just, it was a core part of our business. We dealt a lot with local banks, community banks, and evaluations were just a big part of the services that we offered. Also, personal experience, as Carl said, while I was on the Appraisal Standards Board, we wrote some advice to appraisers on dealing with evaluations and how to reconcile that with appraisal requirements. And then I'll cover this a little later, but living in Tennessee, we have a pretty unique law with regard to evaluations. And years ago, when that law was drafted, I was on the appraisal board, and so the state, I consulted with the state on that. So I guess just reiterating what Carl sort of said in the introduction there, I'm very familiar with the evaluation topic and something that I've personally just literally done hundreds of over the years. So glad to be speaking about it. So our main topics we're going to cover today, these are the topics that I have covered. And of course, Carl, I believe they can submit comments and questions through the chat window. Is that right?
Yeah, absolutely. If anybody does have any questions, feel free to chat, and we're going to save some time at the end to answer those questions.
Yeah. So and not necessarily in this order, but this is the general outline of the day or the session here. What is an evaluation? How does an evaluation compare with an appraisal? Who's allowed to do an evaluation? And what are the implications if you elect to use an appraiser to do an evaluation? and then just some general, what are the pros and cons of evaluations. Now, as we go through these main topics, there's a lot of compliance-related tangents that kind of go hand in hand with some of these. And were we to try to dig in depth on some of those compliance things, we could make this a 3-day seminar. So I'm going to touch on some of the compliance things at a high level. If you have specific questions, I'll be happy to address those, and I'll try to anticipate some of them as we go, because it is a bit of a compliance spider web here, and I think you'll start to see why as we dig into the material, right? So one thing also is I'm a USPAP instructor. I teach the uniform standards of professional appraisal practice to appraisers throughout the country. And one of the things I've found in that is that when appraisers have appraisal questions, we can often answer those questions by looking at the definitions, right? And so it seems appropriate to me, if we're going to talk about evaluations, let's look at what is an evaluation, right? And how did they come to be? I'm sure most of you know that the evaluation, that term, was coined or created by the Interagency Appraisal and Evaluation Guidelines. Right? This was something that basically the lending regulators came up with outside of the appraisal community. You see on your screen, I've duplicated or copied the definition of what an evaluation is straight from those interagency guidelines. Right? So it's evaluation that's permitted by the agency's appraisal regulations for transactions that qualify for the appraisal threshold exemption, business loan exemption, or subsequent transaction exemption. Well, I don't know about you, but when I read that in a vacuum, it's not crystal clear, right? What is an evaluation? So I thought, well, let's then look at the definition of appraisal and contrast that, and see if we can look at the two, back to back, and see if we can see the difference. So I go to, in the same document, in the glossary section, saying what's an appraisal, right? And this, again, same source, the Interagency Appraisal and Evaluation Guidelines. A written statement, independently and impartially prepared by a qualified appraiser, state licensed or certified, setting forth an opinion as to the market value of an adequately described property as of a specific date, supported by the presentation and analysis of relevant information, market information. And I go from one to the other, and it's still not really crystal clear to me. And I look at the two things, and if that's where your starting point, you say, what are the differences, right? And I would point out a couple of things here. If you look at the definition of appraisal, one thing is it addresses specifically who has to do it. It has to be done by a qualified appraiser. Somebody who's either state licensed or state certified. And then if I look back at the definition of evaluation, I see that it is something that is based on exemptions, right? Either the appraisal, the threshold exemption, the business loan exemption, or the subsequent transaction exemption. So I put those together and I say, what's an evaluation? An evaluation is some sort of valuation service that doesn't have to be done by an appraiser that I can get in cases where I'm allowed to get something other than an appraisal, okay? And if you look just at the context of the interagency guidelines, I think that kind of captures what it is. It's something you get in lieu of an appraisal report, okay? Now, it does get a little more complicated than that because these definitions are just the definitions from the interagency guidelines. On top of that, we have definitions that appraisers have to work under. The definition of an appraisal from USPAP, which is an opinion of value. Under USPAP, the Uniform Standards of Professional Appraisal Practice, any definition of value is an appraisal. And most states have their own individual state appraisal laws. And under those definitions, almost all of them mirror the USPAP definition, right? And that's what causes a little bit of the spider web that we're going to talk about later, but I want you to keep that in the back of your mind, right? What's an evaluation and what's an appraisal sometimes gets a little intermingled and not clearly separated, okay? But let's just start with the interagency perspective. which is an evaluation is something in lieu of an appraisal, right? Not necessarily less than, but in lieu of, right? So who can do an appraisal? Who can do an evaluation? Well, we kind of covered that in the definition, right? Appraisals require an individual who's got the proper state-issued appraisal credentials. And the three main categories are licensed, certified residential, certified general. So if you're a lending institution and you're going to order an appraisal, then you know you have to have a licensed person or a certified person, right? And I know for us, for example, that's just part of the way our system works. Anytime we order an appraisal product, we are automatically checking. Our system automatically goes out to the national database of appraisers to verify that, yes, this person is a licensed or certified appraiser, and yes, their license is active right now. In fact, I mean, we have a lot of safeguards in place. For us, when we order an appraisal, we check the appraiser's credentials. When that appraiser sends a report into us, we recheck those credentials, right? Because it could be that the appraiser had valid credentials when we ordered it and something happened in the meantime. If we have to get a revision or anything happens along the way, right? So this is a key thing about the appraisal report. The person who prepares that has to have active, state-issued, valid appraiser credentials, okay? Evaluation is something a little different, though. Evaluation is not required to be completed by a state licensed or state certified appraiser. Also not required to comply with the uniform standards of professional appraisal practice. Now, that doesn't mean you can use just anybody, right? But it does mean that you don't have to use an appraiser or somebody with active appraiser credentials, right? And all this text, by the way, is pretty much quoted straight from the interagency guidelines. I tried very hard not to make up my own language here. Right? So who do you pick? Well, the evaluation preparer, the evaluator, right, should be knowledgeable, competent, independent of both the transaction and the loan production function in the institution, right? So they have to know what they're doing. They have to have some sort of training, right? And they have to be independent. And in that way, that's very similar to what USPAP requires of an appraiser, right? USPAP actually defines appraiser as somebody who's expected to act competently and ethically and in a manner that's independent, impartial, and objective. So even though you don't have to use an appraiser to do an evaluation, you do have to use somebody who meets a lot of the same criteria, right? Somebody who, again, knows what they're doing and is independent of both the transaction and the loan production. And then it specifically cites that evaluations can be completed by a bank employee or by a third party. And we'll talk more here in a second about who people, or what kinds of people do lenders use to do evaluations, right? Now, if you're going to do evaluations, you also are required to have some criteria in place as a lender. You're going to have criteria for selecting the appraisers, or the evaluators, I'm sorry. I'll probably make that mistake a couple times today. That's just, I'm always used to talking about appraisers, right? But however you select the people who perform the evaluations, there has to be some method for that. And for evaluating and monitoring the performance of the people who do that, right? So in your selection and setup criteria, you need some educational requirements, some requirements about expertise and experience, some way to validate that the evaluator is actually competent to complete that assignment. And then there has to be some provision for periodic review. Again, those things are very similar to the way we do with appraisers, right? Most lenders, most AMCs have systems in place to periodically review the work. For us, we actually review every appraisal that comes in the door, right? But there has to be some, if you're going to do these internally, if you're going to order evaluations, you have to have some review system in place. And then it has to be done by somebody who's unbiased. Again, very similar to the appraiser requirement, okay? Note that with regard to independence, right, they go on and elaborate on that. We've already seen they have to be independent of the transaction, independent of loan production, right? No direct, indirect, or prospective interest, financial or otherwise, in the property or the transaction. So it's you know, a lot of defined firewalls you have there, So especially, I think if you're going to do these with internal staff, you have to be very careful in setting up guidelines on who can do them and who can't. Must have appraisal or collateral valuation education expertise, and then again, specifically, experience relevant to the type of property that's being valued, right? So if you have a residential evaluation, which is the focus of what we're talking about today, you need somebody who's got experience with residential property, right? Not somebody who's only dealt with commercial property, for example. And the reverse would be true. If you have somebody who's a certified residential appraiser that you've been using for evaluations, and then all of a sudden you get a commercial kind of property, if that person doesn't have that kind of, doesn't have experience with that type of property, they really shouldn't be doing that evaluation, right? So who does them, right? and as the list says here, and again, this is sort of straight from the guidelines, it may include appraisers. It certainly may. And along with appraisers, I would say it may include former appraisers, right? I know we have a local lender there in Nashville that for their evaluations, one of the things they like to get is retired appraisers, right? And now, you know, you guys probably know the average age of appraisers is getting on up there. So the pool of retired appraisers is actually pretty good. And sometimes, well, obviously, if a person used to be an appraiser, and when I say retired, they may be like retired from work or just have retired their license and don't have active credentials. So you can use an appraiser, but several other folks come to mind as well. Real estate lending professionals. I know lenders that do use staff they have in the bank that have been specifically trained for this. From the regulations, they cite agricultural extension agents and foresters. I also know that some lenders do use real estate agents for this, but there are some compliance concerns when you get into real estate agents that will, because, and you might think, well, real estate agents do this stuff quite often, right? I mean, most real estate agents, they do BPOs, they do CMAs, they do a lot of stuff that looks a lot like appraisals, and you say, well, that would probably pass for an evaluation. And we're going to talk about why that can be problematic a couple of slides coming up, right? Bottom line is, can be an appraiser, can be anybody else who has the proper background, the proper training, expertise, and knowledge. Appraisers are certainly an option. Others are an option. And when we talk about pros and cons here in a few seconds, you're going to see that either way you go, there's some things you have to consider. And either way you go, you have to have those criteria set up that are expressed in these guidelines. Criteria for selecting the person and reviewing their work and making sure that they remain unbiased, right? So when can you do it, right? As we read the definition of evaluation, we learned that it's basically, you can do an evaluation when you don't have to get an appraisal. And there are 3 specific exemption categories that apply. And the first one is the one that I think you hear most cited here. The transaction value is $250,000 or less. And generally that means the loan amount. So you have, relatively small loan, relatively low risk. And so you're exempted from the requirement to get a quote-unquote full-blown appraisal, and you might consider an evaluation instead. It also applies in certain renewals, refinances, or other transactions that involve extending an existing or a line of credit or existing credit base, and for real estate business loans in which the transaction value is $1 million or less, and the income from the real estate is not the primary source of repayment. Again, talking about the residential arena, the first bullet is the one that's really going to apply most of the time, right? 250 or less. So now let's talk about actually doing an evaluation. Now, in the Uniform Standards of Professional Appraisal Practice, we break it down into 2 things: development and reporting. Development is the stuff that goes on in USPAP. It's the thing that goes on in the appraiser's head, and then the reporting is what goes on in the paper. And those don't necessarily, they're not always the same thing. And it's the same thing with the evaluation rules, right? If you go to the interagency guidelines, you will see a section that talks about evaluation development. Right? So evaluation development is all the analysis and the mental things. This is the stuff that goes in the evaluator's head, right? All the, you think about it, all the calculations, all the judgments, all that stuff really happens mentally with the person who's preparing the evaluation. And then they translate some of that into a document that they submit to the lender. That becomes the reporting requirements. And in the guidelines, these requirements are addressed separately. You know, what you have to do in the development, and then certain parts of that have to actually go into the report when you get done. Okay. So first thing is it has to be consistent with safe and sound practices, and it's got to support the institution's decision to engage in the transaction. Right. This is very similar to I like the language in USPAP that says your appraisal has to be consistent with the intended use. Right. So whatever the development includes, it has to be sufficient to support that lending decision. Okay. The next key point is it must provide an estimate of market value as of a stated date. And this is where you can get into some issues if you elect to have real estate agents prepare evaluations. There have been people in the past who engaged BPOs, broker price opinions, CMAs, comparative market analysis. And those terms, by the way, I find they're very regional. In some areas, there is a clear distinction between what is a BPO and what is a CMA. And in some areas, there's not. They're considered basically the same thing. But either way, if you have a real estate agent who is preparing some sort of analysis, a broker price opinion is just that. It is an opinion of price, right? And an opinion of price does not meet the evaluation standard because evaluation has to report market value. And then a further complication is that there are several states, most states in fact, who prohibit a real estate agent from delivering an opinion of value. They say you have to be an appraiser to do that. So this is where some of the compliance murkiness starts to creep in.
Hey, Danny.
Yeah. Go ahead.
Yeah, mind if I jump in real quick? I just have a question. So,
yeah.
You know, I mean, we both talk to lots of lenders all the time, and I don't see many people being very comfortable with BPOs in today's day and age. But would you mind elaborating? You mentioned, I'm just curious about it. The difference between a broker's opinion of price and market value, and hearing you say one's an opinion of price and one's a market value,
right.
I know, and I'm setting you up a little bit, but it almost sounds like maybe semantics.
Yeah.
But why is it not semantics?
Well, it probably does to most laymen, right? Price, value, same thing. But you know, in the valuation community, we have very, very clear walls between what's price and what's value. And I know that you'll be shocked to find that I actually have USPAP sitting on my desk, and I'm turned to the definition of price, right? Mm-hmm. So price is the amount asked, offered, or paid for a property. And once stated, price is a fact. Right? So when you see a BPO, you're generally looking at a recommended list price, right? And so that then becomes a fact, right? If the agent says, I suggest you list the property for $150,000, whatever, that once you state price is a fact, right? Now, they may go through very similar analysis using comps, adjustments, and things like that, but at the end of the day, they are estimating a fact, right? Value, on the other hand, it's an economic concept. Value is the monetary relationship between properties and those who buy, sell, or use those properties. And as such, value can never be a fact. Value is always an opinion. Okay. In fact, I get kind of amused when people try to measure the accuracy of an appraisal, because it's like, how do you measure the accuracy of an opinion? It's a fact-stated, a fact-supported opinion, but and so in some ways, I will grant you that it may seem like semantics, But where it really, really matters in the compliance world, and when you're dealing with the state laws, it has to be given its due consideration. I know lots. I am very familiar. I used to work as a chief reviewer for my state board in Tennessee, and they were certainly not shy about taking action against a real estate agent who would develop an opinion of value, right? And the law in my state, it's very difficult. The V word is considered sacrosanct by the appraiser boards. Only an appraiser can give you the V word. And that's the way it is actually in most states, right? So because of that, a lot of people just go safe harbor and say, we're just not going to use real estate agents because they don't want to entice a real estate agent to do an evaluation that might put that agent in conflict with his or her state real estate laws, right?
Makes sense.
Now, for us, with our legal department, our compliance group, we have lots of studies. We know the states where it's allowed, where it's not allowed, whatever. When somebody comes to us, we give them the information and let them make decisions about, what they want, with the caveat, of course, that we're not going to do it in any state that doesn't allow it, regardless of what, right? But this is, it's an important concept that an evaluation must report market value, okay? And we're going to find out later, it also creates some complications on the appraisal side, by the way. So on the development side, the other things that have to be considered, you got to address the property's actual physical condition and its characteristics, as well as the market conditions in the area, okay? Very similar to what an appraiser is required to do, right? It is not acceptable for an institution to base an evaluation on unsupported assumptions. And one of the specific example they cite is you can't just assume the property is in average condition. Then they go on to say, now, we don't really require an inspection, but if an inspection is not performed, the institution has to be able to demonstrate how the property and market factors were determined. So you don't have to do an inspection, but if you don't, you have to document or have some way to explain how you got the condition information for the subject property. And what we see in the real world is most people meet this requirement, and I know from talking with regulators that they have that they accept this. Most people rely on an exterior only inspection where somebody drives by the property and does that kind of inspection from the street, and then makes an assumption that the condition of the interior is consistent with what's seen on the exterior. It seems that the regulators seem to have judged that a reasonable assumption, whereas just assuming it's average with no other data at all, they view as, not acceptable, right? What we see, and we're starting to see this in the appraisal process itself with a bifurcation of work, and we've seen this in the evaluation world for a very long time. I can tell you specifically, I had clients back in the 80s that were doing evaluations where they found it perfectly acceptable for you to send someone else out to do the inspection of the property, get the pictures, collect information, and then take it back to the person who was actually doing the evaluation. We're starting to see that more and more in the appraisal world now too, but the evaluation community really kind of led the way on that, right? Now, other methods you might use, I know lenders that say, well, if I have a recent listing, generally I can go to the internet, I can look at interior photos, and in that case, I don't even need somebody to drive by the property. I can view what's available there. In some cases, depending on the area that you're in, tax records may have very good indications of property inspections, right? There is a lot of leeway here, but there's also the responsibility to make that decision that what you're doing is enough, right? The most common thing that we see is somebody does that exterior inspection, and in some cases we've seen somebody doing an interior inspection. I will tell you, there's one really cutting-edge company, I can't say who it is, but we've dealt with them. They actually have, this is pretty cool, they have an app that the borrower can put on their phone and take the pictures of the house themselves. And what the app does is doesn't allow any photos to be edited. It geocodes the pictures. And so, and this is really cutting edge. So the borrower can stand in their house, say, here's my kitchen picture, here's my bathroom picture, here's a picture of my roof, here's the front view, rear view, and it kind of walks them through the pictures that they take. And then those get sent to an evaluation preparer. And they're geocoded so that you can tell where that person was standing when they took the picture, which, you know, some people say, well, how could you trust that? But they have really tight controls on this software so that you can't import pictures. They have to be taken with the camera. They have to be time stamped and location stamped. So, you know, it's the world we live in, right? Technology is affecting everything, right? So that's what goes on in the evaluator's head. Now let's look at what has to be in the document, you know, what you have to put on paper. Evaluation report should contain sufficient information detailing the analysis, assumptions, and conclusions to support the credit decision. Again, it's very similar to the wording that you find in the appraisal standards, right? The appraisal's got to have enough information for the intended user to understand it. This is sort of what this is saying. An evaluation's got to have enough in it for you to really make a decision based on it, right? The content's got to be documented, and it's got to be reproducible, and it must at a minimum, and then they're going to list out now 8 things that have to be in every evaluation report. Location of the property, description of the property and its current use, an estimate of the property's market value and its actual physical condition, use, and zoning as of the effective date, and then any limiting conditions that might apply. As we said before, in the development part, you have to have some way to document the condition of the property. Could be an inspection, could be something else. Whatever that method is, it has to be documented in the actual evaluation report. That's item 4 on the list. Right? 5, describe the analysis that was performed and the supporting information. So this is important because if you look at the previous one, item 3 here says you got to have the value in there. Well, that's great, but then you come to item 5 and it says basically not only you have to tell us the value, you have to tell us how you got there, right? So if you have an evaluation report that only has a result, it only has the bottom line, that's really not a compliant evaluation report. It has to also have the support. Okay. 6 is one that used to be really important and is losing importance more lately as people are not using these. But if you use some sort of analytical method or a technological tool, then there has to be information in there about that. The regulators have said basically you can't just use the result of an AVM, but you can use an AVM as the basis for an evaluation if you add some analysis to that. The use of AVMs alone was sort of tried by several lenders. The regulators have made very clear now that use of an AVM alone, they're not going to like that. Right? They want something else in there in addition to that analytical tool. Okay? And that's to list the sources of the information used in the analysis, including, what kind of external data sources did you use? For most people that do these, you'd want them to have access to like a local MLS system, public records, right? Although I will say that, in the time that's passed since these rules were written, there's a lot more data available than there used to be. But still, you probably, if you're doing a lot of these, you're going to want somebody who has, that good local. I mean, you really can't do a good valuation service, be it an evaluation or an appraisal, if you don't have access to the right data. So as you screen people to perform these services for you, that's one of those tests that you got to have. Does this person really have the data to do this? Right? Where are they getting their property-specific data? Information about previous sales, assessment data, where you're getting your comps, right? Evidence of the inspection, if there was one, the photos of the property, description of the neighborhood, and market conditions. So these are things that are required to be not only occurring in the person's head, but then they have to communicate it back to the lender. So you have to tell us not only what the result was, but how did you get there, It's kind of like those tests we had in high school where you had to show your work, right? Where you just get the answer is not going to cut it. You have to show your work, and that's the way it is with the evaluation. You have to show your work. You have to show the properties and say, not only what's the value of the property, but what's going on in the area. Right? Again, this is the kind of stuff you see in appraisal reports all the time, right? And then the last on the list is information on the preparer, who did it, what's their name, how do you get in touch with them, and some other kind of signature. Most people now obviously using electronic kind of signatures, right? That's what has to be in there. So think about that and look through the list of things there. And how different is this from appraisal requirements, appraisal report requirements, right? I don't know. Carl, from your perspective, how different do you see that being?
I think that they're absolutely complementary to some extent. I think that the biggest difference from our standpoint, and I know you're getting to this, and there's actually some questions around this, is as you're looking at who can be the preparer. I think that's what we always struggled with in the past. How do you really define knowledgeable and all that stuff? There was no bar that could be set, and so I think that's one of the I know this isn't a commercial for ServiceLink, but that's one of the things that we really liked going into this partnership is we all have a pretty clear understanding of what's required of an appraiser, but it's so much more complicated when you're thinking of what's required to be an evaluator and how do you prove that, how do you know that, and there's a lot of folks offering these types of services that that I think are probably not very qualified, or even there's a question, and I'll kind of grab some questions as well because I think it relates. So one of the questions as we move into using appraisers to perform is, are there any states in which an evaluation has to be done by an appraiser? Which is a great question. So I'll let you take that one, Danny.
That's actually the next slide. That's a great lead-in. Thanks for submitting that one, right? Well, yeah, the truth is, in most states, evaluations must report market value, right? We read that right in the requirements. And in most states, they legally require that unless you own the property, in order to opine to the market value, you have to be an appraiser. And in most states, if you're an appraiser and you say what the market value is, you got to do that in an appraisal report. Okay. Now there are some exceptions to that. There are, and Tennessee is one that I know because I live there. And from the very first day that our appraisal law was written, it exempted evaluations from the appraisal law, right? So Tennessee and Georgia is one as well. They just say basically once it's now in Tennessee, for example, we are specifically required by law, if we do an evaluation, it has to be labeled as an evaluation. It has to say very prominently, this is not an appraisal. Okay, and if we do that, even as a certified appraiser in Tennessee, then the appraisal law does not apply. We would still have to follow the interagency guidelines, but we would not necessarily have to follow the uniform. Well, we wouldn't have to follow the uniform standards of professional appraisal practice, nor would we have to follow the state appraiser law. But here was my take on that. I mean, you look through the requirements there that have to be in a report. You look through the appraisal standards for what's allowed. Now, I don't want to get too technical in the appraisal, but there's basically two kinds of appraisal reports that the standards allow. What's called an appraisal report and a restricted report. And again, we could do a 2-hour class on that, but a restricted report basically is just the answer. It's not required to show the work. And an appraisal report is what you normally think of when you're. It's probably what you're seeing in your head right now when I say appraisal report. But there's an in-between because you can take a restricted report and add to it, right? And so that's how we always approached it at my personal firm that I used to own. We would do these as, even though we had the option under our law to do them as evaluations, we did them as restricted appraisal reports, and we would take those minimum standards in USPAP and enhance them so that we were complying with both the appraisal rules and the interagency rules for what had to be an evaluation. And our lenders liked that, and I think they liked it for the reason you just touched on, Carl. If you say I'm using a certified appraiser, that kind of takes the whole question of, is this person qualified, off the table, right? If you use someone other, and that's a challenge you have here. Now, Tennessee, again, is unique because we have that exemption or exception, and so does Georgia. But if you're doing national and regional coverage, what you're going to find is that you ask an appraiser to opine on market value, they're going to have to do it inside an appraisal report. But that doesn't mean they have to use a Fannie Mae 1004, right? The format that I used at the Wiley Group, my personal firm that's not in existence anymore, it was a cover page that had a certification, and then it was a page that summarized all the required elements, and then the next page was basically an adjustment grid and some limiting conditions. Really, we only changed, we had it set up in Microsoft Word, and effectively, once we got the template made for us, it became like a one-page form. Because once we changed the one page and put the comps in, we were done. And we were working with lenders who allowed third-party inspectors, right? So basically, these became like desktop appraisals for us, but they were meeting the evaluation requirement for the lender. And you know, we were pricing those out in the market back. I mean, it's my own company back then at about a third what we would do an appraisal for. But we were pretty expensive as an appraisal company, I have to admit.
And Danny, I'll ask a question going into going with that question from Mike. So his question is, and I'm interested, and I might, Mike, let me know if you mind. I might unmute your line to have you elaborate if it makes sense. But one of his questions was, are evaluations less reliable than an appraisal when prepared by an appraiser?
Well, I mean, this is all about scope of work, right? And it's no different than, even in appraisal world, you know, you got desktop appraisals, drive-by appraisals, full-blown appraisals. You know, when you say appraisal, they come in all kinds of different sizes. So it just depends on how you want to define that scope of work, how you want to dictate the level of inspection and the information that's collected. Certainly for us, we saw, I mean, I had some lenders that allowed third party. I had some lenders who required the appraiser to do the exterior inspection himself or herself. In that case, for the ones we did, there would have been no difference in reliability between the evaluation and, say, a 2055 report. Just our documentation standards would have been a lot less. Right? Mm-hmm. Because really, we're doing the same thing. Remember, it goes back to the difference between the development and the reporting. Well, on the development side, we were really doing the same thing, right? We had to go through the same mental processes to get to that value, right? I mean, the valuation process really doesn't change. It's the same process. I used to be on the International Appraisal Standards Board, and I've actually got a library of appraisal standards from all over the world, and the appraisal process is the same everywhere, right? And same with this. You go through the same process. It's not really evaluation versus appraisal that affects the reliability. It is the agreed upon scope of work, right? And I think
it's fair to say that. So it's fair even to answer Mike's question. Would it be fair to say that an evaluation is as reliable as an appraisal when prepared by an appraiser?
I would, and given the same scope of work. Right?
Yeah.
If you ask me to do an exterior only on a 2055, or you ask me to do an evaluation where I drive by, those should be the same.
Yeah.
Right? Now, clearly, you ask me to do a desktop versus a drive-by, there's different risk there and probably a different level of reliability.
Yep.
Right?
No, great.
Just
really
like
helpful.
drive-by is different than go inside, right? So let's talk about, you know, pros and cons. Pros, maybe faster. That really is more about scope of work. It's about maybe I don't have to go out personally to inspect it as the evaluator. You know, I can work these in. My staff at my old firm, they loved evaluations because they were time fillers, right? There were things you could work in when it's 4:15 and you don't have another appraisal inspection until in the morning. You need something to do. We could work these in to fill calendar gaps, and because of that, we could churn them out relatively quickly. Right? May cost less, may cost a little less. Again, that is about scope of work. It's about report content. If you have an appraiser who's adept, particularly with Microsoft Office and creating their own forms and formats, these things are, they can be created pretty quickly. And then clearly you have a larger pool of providers. Right? You don't have to be, and this is an issue in some states right now. I'm sure you guys have heard the phrase the cow states, right? There are areas where we're starting to have shortages of appraisers. And so if you've got appraisers out there, you're in an area where there's a limited number of appraisers and you're filling their buckets up with evaluations, well, that could affect your appraisal service. So having a broader pool of providers who can do this is a pro. Okay, there's certainly some cons. The first one I think is no uniformity, right? Just a few weeks ago, I was up in Canada for the International Evaluation Conference in Ottawa, and one of the things I just about fell out of my chair when I heard this was in Canada, we have Fannie Mae, and thanks to Fannie Mae, we have these uniform sets of forms, and so for appraisals, if I say appraisal report, the vision in your head is exactly the same as the vision in my head. You know what a 1004 looks like. You know what a 2055 looks like. They don't have that in Canada. The appraiser actually gets to pick the form that he or she wants to use. And even they have a group called the Appraisal Institute of Canada that creates forms, but even they have different versions. And I was sitting there thinking about the nightmare of my QC staff maybe looking at, you get the same property appraised by 5 different people. It comes in on 5 different forms, right? Well, that's kind of the world of evaluation, right? There's no official evaluation forms, so everybody you deal with kind of creates their own. In fact, we have a client right now that they get some of their services from us and some from somebody else, and it's just driving them nuts that there are some small differences between the forms and the formats, right? So that's a battle. Now, depending on your size and depending on, you can go to a company and for us, we customize the forms for each individual client. Some do that, some don't, some just live with it, right? But it is something to consider that you're not going to have uniform, universally controlled formats. It usually will cost less, but there's no guarantee of that because it depends on the scope of work that you dictate, right? If somebody says, well, I'm a very conservative and I need the actual person, I need an interior inspection and whatever, you may end up driving the cost up, right? So whether it costs more or costs less, I mean, for me, it was all about just how much do I make per hour, right? And we could price our evaluations a lot lower because the lenders we were dealing with, it was just a different scope of work, right? And then I think the biggest con is this compliance confusion. Can an appraiser do them or not? Can an agent do them or not? And generally what we find is people go all in one way or the other, particularly with regard to using appraisers. Most of our clients who use this, they use appraisers, and we actually deliver reports that not only meet the appraisal standard, but also meet the evaluation standard. In fact, we have what we call our roadmap document where we lay out, this is how this report, and it's a numbered document that says, here's how it meets the 8 things that are required in the evaluation content. Here's how it meets the appraisal requirements. That's the easy way in my mind, but it also does cut down on your pool of providers, right? I know other lenders that there's a lender in Nashville, for example. They use some internal staff that are mainly former appraisers who moved to the banking side. It's pretty easy, I think, to document their criteria there. These people had appraisal credentials, they've had classes, right? But if you don't have access to those kinds of people, there could be some sort of challenge, right, in documenting, because you saw the requirements about the technical capabilities that these people are supposed to have, right? So,
yeah, and I always remind people too, Danny, that just in our experience with state, and you mentioned this earlier in the presentation, every state law is different. there's similarities and then there's slight
Right.
differences. Some have vast differences. And so I remember a couple years ago, we had a client of ours that they had an internal credit underwriter that was doing evaluations, had been doing them for a number of years, and just consulting with the client. We didn't even offer the evaluation service at the time, but
Right.
we just being helpful. We were talking to them and we heard how they were doing things, and we brought it to their attention that in this particular state, and I can't remember which one it was, that the state law said any opinion of value must be done by an appraiser.
Right. Right.
And there was no internal bank employee exemption, which some states have, some states don't.
Right.
And we in fact, on behalf of this client, called the Attorney General in the state, and in fact determined that this was what this internal bank employee was doing was in fact against the law. We called anonymously on their behalf, and as you can imagine, they don't do that anymore. But I think the message is, the message to everybody on the call is, whether you use a third party or whether you do things internally, and everybody probably has a process already for how they do things.
Right. Sure.
Whatever you do, I think it's really important to dig into the state law yourself, because we've even found at Mountain Seed that occasionally we'll feel like we're crying in the wilderness because we're not doing, we err on the side of kind of ultra compliance, and there's people that do things that are skirt the edges a little bit. And once we've dug into some state law, we found that even some of the largest companies in the country were not as in tune to what the state law requirements are. So my message to everyone on the call is, whatever you choose, appraisers, non-appraisers, internal employees, external employees, I think it's really important not only to be able to document how you're choosing who you're choosing, but also to be able to go back into not just the interagency guidelines, but into state law to make sure that you're compliant there as well, because you might be doing something that you don't realize. Another question about compliance, and this is something I hear from people a lot, and do you, and I just can't remember, I probably should know this, for residential evaluations, is the requirement also now that you have to deliver a copy to the borrower?
There's no requirement that I know of, unless, but it could kick in though, if you get an appraiser to do your evaluation and that appraiser then prepares an appraisal, right, then you could get into a requirement to disclose that. And that's where it gets a little murky, because, in the interagency guidelines, there's this big, nice, clear distinction. This is the appraisal standard, this is the evaluation standard. But as you know, a lot of our evaluations that we deliver back, the reports we deliver back to meet the evaluation standard are actually appraisals.
Yep.
Right? They're actually appraisal reports. So I'm going to stop short of giving any legal advice on that. Right?
Sure. And to that point, I think it's, again, definitely not a commercial for the service, but so that people understand where our mindset was, feeling comfortable with a company like ServiceLink who does use appraisers, is A, you've got the knowledge base, but B, you can also review those reports like a traditional appraisal review, which is I think a nice benefit as well.
It is. The only downside we see on that, honestly, and I'm just being, is people start, they use the same reviewers they use for their mortgage work, and they don't understand that these are not Fannie Mae appraisal reports, right?
Sure. Yep.
We actually had a compliance person recently who sent one of our appraisal reports to their state board. They didn't like that there wasn't enough commentary explaining the adjustments, and the state investigator basically called me up and politely said, "Will you please ask this person not to send me any more of these stupid complaints?" Right? Because they are different, right? And as long as you understand that, but I think what happened is that the lender started using them, really hadn't communicated with their compliance person what was going on, and so they were really trying to review these evaluations using the same criteria, the same checklist, the same everything that they were using for their Fannie Mae origination work, right? And just as the scope of work is different, you should look at them, review them for what they are, right?
Yeah. Yeah, no,
It's funny you mentioned
good.
the legal stuff too. But we have a huge spreadsheet that we keep with all the laws on it for appraisers and AMCs and everything, and BPOs and all that. And then anytime we start working with a new client, we always compare our spreadsheet to theirs, right? And it's like you said, they never really line up 100%, right? Because some of the laws just really aren't that clear.
Yeah. Yeah.
I know here we are in Pennsylvania, it's very confusing with that. They make this weird distinction between a BPO and a CMA, and we're just like, forget it. Yeah. Anyway.
Yeah. So and as everyone can imagine, we're in the Q&A session. I've kind of woven some Q&A throughout this. One of the questions, and I'll ask this, but you actually mentioned this. So a question came in that said, does anyone have a list of which states have to use an appraiser to do the evaluation? I know you mentioned you have some of those types of lists. I didn't know if you had one of those. If so, I could provide it to the audience.
We're not allowed to because it contains legal opinions. Okay. I will tell you it's changing very rapidly though. There is a big move in the appraiser community to have more states with exemptions like we have in Tennessee. But then there's also, I will tell you, there's a big controversy in Virginia now. Virginia just passed a law that is worded very much like the Tennessee law, that basically says your appraisers doing evaluations are exempted. But the state appraiser board didn't take kindly to it, and they've basically said we're not enforcing that, and don't be coming here doing your evaluations, Virginia appraiser. That is probably going to end up, at the Attorney General's office, to be honest, to get a legal review of it. But having said that, it is more and more states are moving that way. It's very few right now. Right now, if you want to use an appraiser, you basically need to go ahead and get a restricted appraisal report and have them add enough to that restricted report to make it comply with the interagency guidelines for an evaluation.
Got it. In the interest of time, I'll ask one more question. So folks on the call may or may not know, but there's a proposal to increase the de minimis on commercial appraisals and evaluations from $250,000 to $400,000. One of the questions was, do you see any implications to residential evaluations with the pending rulemaking to increase the threshold from $250,000 to $400,000?
It's hard to speculate on that, but I mean, just to be honest, it would make sense, right? I mean, that number has been the same number since what, 92, right?
Yep.
I mean, so what it really means is every year it changes whether you can do the evaluation or not, because the property value and the loan amount change, right? I think it's time for them to review some of that stuff. We have the same issue, by the way, with licensed appraisers, right? They're not supposed to do properties over $1 million, which kind of means every year the number of properties they can do diminishes, right? In most areas, properties go up a little bit. So will it have an effect? I wouldn't predict whether it will or not, but it wouldn't surprise me at all if they don't, as they're looking at one, if they don't eventually, even though they're saying they're not right now, it wouldn't shock me if they don't eventually do that.
Yeah. Well, this has been great. And I did actually ask a question to one of our internal compliance folks to get clarity on delivering a copy of evaluations to the borrower. So I believe, although we're going to clarify, that under the ACOA rule, you should be delivering a copy of the evaluation to the borrower, and so that's also one of the reasons I've heard folks looking more externally on evaluations is essentially not wanting to provide internal evaluations to the customer, because obviously from a relationship standpoint, that can get a little muddy. So,
right.
But
you always need a fall guy, right?
Yeah. So all that being said, we are out of time. There will be a slide presentation that will get circulated, as well as a recording of this presentation. I'm super grateful to Danny Wiley and ServiceLink for partnering with us on this webinar. If you want to learn more about the evaluation service and how you can order it through the Mountain Seed portal, feel free to reach out, and we'll send some contact info around so that you know how to do that. We will be back next month. I think next month we might have our Chief Appraiser, Rob McPherson. It's either next month or the month after. that's going to be talking about some new things going on at Mountain Seed and some review advice and stuff like that. But thanks everyone for joining, and have a great rest of your week. Thanks, Danny.
Thank you. Thank you.